Hello and a very warm welcome to everyone. I am Anshul, your host for this webinar. It's my pleasure to introduce you to our keynote speaker, Ankita Gupta, who's the pre-sales lead of AI-based lending and eMACH.ai lending at Intellect Design Arena. Throughout her career, Ankita has been at the forefront of shaping banking and lending ecosystems. Today, she'll be sharing her insights on the power of AI in underwriting and how it is aiding banks and institutions in delivering faster credit decisioning and much more efficient lending operations to serve the SMB customers. Now, without further ado, I would like to invite Ankita to take the virtual stage.
Thank you for the introduction, Anshul. Hello, everyone, and thank you for joining us today. So, a little bit about my experience and my background. Over the last several years, I've worked closely with banks across Asia, Europe, and Canada, supporting them in transforming their lending journeys. My background spans product management, pre sales, and solutioning, giving me an end to end view of how lending systems can be reimagined. Leveraging AI for digital innovation is something I've been extremely passionate about, and I'm really looking forward to sharing my insights with all of you today. So, we're here today to explore a topic that is transforming the future of lending, how AI is revolutionizing SMB underwriting. Over the next 45 minutes, we look at the challenges of traditional approaches, the power of AI, and how Intellect's eMACH.ai framework is helping banks unlock new opportunities. By the end of this session, I hope you have a clear understanding on how AI can transform SMB underwriting. So let's take a look at the agenda for today. So we'll be looking at the critical role of SMBs in the economy, followed by the challenges of traditional SMB underwriting, the role of AI and how it's transforming SMB underwriting, and then we'll go into introducing eMACH.ai lending, as well as the digital experts across the eMACH.ai lending lifecycle, followed by question and answers. So when it comes to SMBs in the developed countries, what we have today, and this is some statistics I found in the World Bank, IFC, European Investment Fund, as well as the US Federal Reserve. What we saw was that there are around 56 million SMB enterprises in developed countries, out of which 36 million SMBs, or around 64% of the SMBs, have access to formal credit. But that means that there's still 36% of SMBs, or around 20 million firms, um, that don't get access to credit and are underserved. And so, therefore, we have around $1.5 trillion worth of opportunity to tap into. So, if you look at this amount, that's a huge figure that we're looking at, and a huge figure that lenders can actually get to, that should actually be accessed. And why is this? So let's take a look at the details of why SMBs are important. So one in three SMBs, if we look at these stats, still lack adequate financing, and we'll get to why it's very important to actually finance them. So when we look at the critical role of SMBs in the economy, we're looking at when it comes to job creation. So SMBs represent around 99% of all businesses in developed countries, and they employ about 67% of the EU workforce and 46% of the private workforce in the US, and 88% of the private labor force in Canada. That's a huge number that we're looking at. So that's a huge figure to pay attention to and keep in mind. When we look at it in terms of economic growth and innovation, in the EU, SMBs generate around 56% of the GDP, and in the US, they contribute to around 44% of the GDP. When we look at other factors, social cohesion and inclusion is also something that SMBs promote by fostering social stability and regional development. They provide employment to locals, they hire from diverse groups, and they support communities. They are also often deeply rooted in local areas, and thereby they promote regional development by promoting balanced economic growth, and they help to reduce regional disparities. So, what do we see here? SMBs are too big to ignore, and underserved SMBs equals to lost GDP contribution. So, when we're looking at SMBs, we're actually seeing that when it comes to GDP contributions, SMBs are actually playing a huge role. So it's imperative not only from an SMB's perspective or the lender's perspective, it's actually imperative from the economy's perspective to give employment and to give lending opportunities and to finance SMBs. So, when it comes to challenges of traditional SMB underwriting, what is the actual issue here? When we look at the problems here, I've broken it down into three major issues. Number one is limited and incomplete data. So, SMBs present a challenge for lenders because they have inadequate data. They don't always have long credit histories. Their data is often fragmented and it lacks extensive financial history, which means that it's not able to accurately reflect a business's current health. When we look at a manual process perspective, inefficient manual processes, the traditional underwriting process is very slow, it's manual, and it's labor intensive, leading to delayed decisions that cause SMBs to miss critical growth opportunities. It also leads to a high operational cost for lenders and a greater risk for human error. And when we look at it from a SMB perspective, an average small business owner spends around 25 to 30 hours gathering documents and filling out forms for a traditional bank loan. That's a huge amount of time spent. And then each document undergoes a manual review by an underwriter or a team in this traditional bank. And thereby, traditional bank loans for SMBs can take around 3 weeks. So, if you look at this figure, that's a really long amount of time for an SMB to wait for their financing needs. And the last salient point where actually AI makes a huge difference is that traditional banks with their traditional form of underwriting are not able to process unstructured data. So when we look at a traditional loan origination system, it's built for structured data, and any unstructured information like digital footprints and reviews are not something that they are able to process, and therefore you're not actually able to assess a company's true health and potential. With all that data that's available from the internet, it's very important to harness this information and actually utilize it so that you are able to, as a lender, lend to any SMBs that perhaps don't come into your credit worthy borrower list because they don't provide a lot of structured data. So, coming to this, so looking at that, there's an imperative for transformation. So, we've seen the untapped opportunity. There's around $1.5 trillion that lenders can unlock and serve around 40 million credit worthy SMBs, 20 million credit worthy SMBs by transforming their traditional underwriting methods. When it comes to a competitive disadvantage, if we look at the market, from a Europe perspective, there are neobanks and fintech lenders such as Oak North Funding Circle that are already offering instant SMB loans. When we look at the US, fintechs like Square Capital, Cabbage, Blue Wine are providing same day approvals. And when it comes to Canada, there are government backed SME lending schemes such as BDC, EDC that are pushing banks to innovate. So traditional banks risk being, like risk having a competitive disadvantage if they can't match fintechs on speed, but they hold an advantage in trust and scale. So it's very important. So there is a factor of trust and scale that traditional banks and traditional lenders have, that these neo banks and fintechs don't have. But because of this, slow process that they are following, they do have a disadvantage. So we can tap into this. We can look at making our processes faster. Then of course there's a demand for speed and convenience in today's day and age. Every single customer, not just an SMB, expect fast, expect seamless and on demand financial services, and the slow cumbersome process of traditional lending is just no longer acceptable. And finally, when it comes to a from when it comes to economic resilience, SMBs, if you're providing SMBs better access to capital, you're in turn boosting job creation as well as innovation for the entire ecosystem. So it's a win-win situation for everyone in the economy. So this is where basically AI is changing the game. So let's look at how AI is coming in, what the role of AI is in transforming SMB underwriting. So when it comes to the power of AI in underwriting and what it's doing is, number one, and I've again divided it into 3 points, three main points. Number one is how it learns from data. So AI is able to dynamically learn from massive traditional and alternative data sets, and it's continuously refining its risk model and identifying subtle patterns without manual intervention. So you're actually able to learn from each new loan application that is coming into the system. So every time the AI model gets a new loan application, it learns more, it enhances itself more, thereby giving a better decision. Second is machine learning, the engine of prediction. So when it comes to machine learning, these LLMs that this machine learning is utilizing uses sophisticated algorithms to instantly automate risk assessment, spot hidden correlations, and detect fraud and anomalies. So you're actually able to catch early risk signals in transaction patterns before they default. So this is how you can actually leverage machine learning, leverage AI to be able to predict whether a customer may default or not. And the third part is unlocking unstructured data. This is something I've spoken about and in the previous points. And when we look at it, there is actually a lot of unstructured data available today in the form of documents, in the form of customer feedback. We will actually take a look at the alternate data sets that are available today. And if you utilize this, you're actually able to find a more comprehensive and accurate view of a business's health. And to add on to this, when we look at the regulations and compliance that are available in the developed economy, we we can see that AI is something that is being encouraged by the government itself. So when we look at it, EU has an EU AI Act that's coming up in 2026, wherein high risk AI is something that is requiring explainability and human oversight. There's, of course, GDPR, and there's open banking or PSD2, which is available. So banks can use transaction data across institutions with consent. So while we have GDPR, while we have this AI Act coming up, it's very important to stay ahead of the curve. So if as a traditional lender, if I actually use AI and I bring in AI and I adopt AI, I'll be able to stay ahead of the curve. I'll be able to adhere to my GDPR policies. I'll be able to adhere to the EU AI Act as well. When it comes to US or Canada, there's fair lending and ECOA, which requires equal treatment and avoidance of bias, CFPB scrutiny, so that's on AI explainability in credit decisions, and Canada's OSFI guidelines, which stress model risk management in AI. So basically, in these regions, AI adoption isn't just about innovation, it's about balancing speed with compliance. So the idea is to bring in AI early, to leverage it, to understand these regulations and compliance so that you're actually adhering to it, and then to be able to utilize it for underwriting and change the game. So when we look at alternate data, and this is something I have mentioned in my previous slides, let's take a look at what do I mean when I speak about this alternate data. So number one is digital financial transactions. So you can actually utilize and analyze these digital financial transactions which are available. So when it comes to Europe, whether it's open banking APIs or PSD2, or when it comes to North America, such as cloud based accounting, QuickBooks, Zero. So, all of this information is something that's actually available today. And if you utilize this and analyze this, you'll actually be able to get insights into the cash flow and financial health of SMBs. So, this data is actually very instrumental in determining the repayment capacity of the business. Second, when we look at supplier and customer relationships, now today, you can actually have access to the utility and rent payment histories, and you can see how an SMB is interacting with suppliers and customers. And therefore, you're actually able to gauge and get a more comprehensive understanding of their financial responsibility as well as their reliability and their reputation. The third, of course, is their social media and online presence. So, when it comes to social media, most SMBs, almost everyone, has a social media account. And by actually utilizing this, by analyzing this in a smart way, by getting consent first, so ensuring that you're compliant to all the data regulations, by getting the consent and assessing all this information, you can actually get insights into the stability and growth potential of the business. And the last part is that utilizing the customer reviews, you can actually gauge the SMB stability as well as the reputation. So I've spoken about how AI is important. I've spoken about the alternate data sets that are available to you today. Let's look at the business impact, because that's what traditional lenders or any lenders, anyone that's in this business for that matter, is very focused on. That how, Ankita, will this actually help me in my business? How will this actually improve my operations for today? Because that's what everyone is looking at. So, using enhanced data ingestion and normalization, intelligent risk scoring, all of this is provided by AI, fraud detection, behavioral segmentation, automated decisioning, continuous monitoring. What am I able to achieve? Number one, faster time to yes, which means faster decisions. And we've seen this, that this has an impact, and it's basically bringing your faster decisions from weeks to minutes. So we saw a figure of 3 weeks earlier. That's the average amount of time that a traditional lender or a traditional bank takes to give a decision to an SMB on their loan application. This has gone down to minutes. Second, reduce defaults via predictive monitoring. So with predictive models and continuous monitoring, you can actually reduce defaults. Third, expanded credit reach. So there were SMBs that were once considered risky, but with this alternate data sets, with the AI coming in, you can actually serve them as well. Then comes operational efficiency, so automated ingestion and normalization. And finally, transparent decisioning. So with explainable AI comes clear rationale. So you have all of this available. And because it's transparent decisioning, you can actually provide this for compliance as well. So EU AI Act or US fair lending, you're sorted. So when we look at some case studies, and I've actually looked through it, I did a little bit of research. So one such example is from the UK, which is Oak North. So this Oak North uses AI-driven cash flow analysis to underwrite SMEs, and they have a loan book which exceeds $10 billion, and they have very low default rates. So they are one such example already using AI to underwrite SMEs. Similarly, in the US, we have Square Capital or PayPal Working Capital, which uses transaction data to extend microloans, and they have a high repayment via daily settlements. In Germany, there's Mittelstand SMEs, which are traditional powerhouses, and basically AI underwriting could actually accelerate their access to working capital. And then in Canada, there are BDC digital SME lending programs which have AI enhanced credit scoring, and they actually improve turnaround time. So AI is not hypothetical, it's already developing, it's already delivering results in your backyard. So it's actually something that's available today. So now let's take a look at eMACH.ai lending, and let's take a sneak peek of what Intellect has been doing in this sphere and how we've been working on improving our tech stack and our architecture. So when it comes to eMACH.ai, that's our enterprise grade architecture. Now, what does this mean? It's a first principles thinking based, comprehensive, composable, and intelligent open finance platform. And basically, it's event driven, it's composable, it's modular, and this means that it's future proof. So what do we provide? We provide event driven framework, we provide a scalable architecture, we provide ready domain packs, we have a seamless integration capability, and we have embedded AI. So what does this mean? This means that you're able to, as a lender, if you utilize our platform, you're able to build, scale, and evolve, and therefore modernize without disruption. And why have we done this? We've done a lot of research and development into the industry and what they require. And what we've seen is the industry demands intelligence, adaptability, and speed. So we've actually harnessed all of this, and we've created this architecture framework, and all of our products that we provide, that Intellect provides, is actually developed on this architecture. Now, when it comes to eMACH.ai lending and what we've done, we've actually created 300 plus ready user journeys. We have 170 plus APIs. We have 45 plus microservices, and we have 20 plus events. And when I quote these numbers, this is the number of today. But when you come back to us tomorrow, let's say, these numbers would have changed because there's constant research and development, there's constant product development that's taking place. So we're always adding to our domain packs, we're always adding to our platform. And what is our differentiator from a lending perspective? Number one, I've spoken about this in the previous slide, but I'll go into a little more detail. Number one, we have an event driven framework. Now, what does this mean? It's a low code orchestration framework, and this actually helps in rapid configuration and rollout of new products. And because it's flexible configuration and parameterization, you're actually able to do a lot of things and be ready with new products for the market. Number two, we provide flexibility and user empowerment. So we actually provide a DIY toolkit to parameterize, orchestrate. We provide user management. We have an API integration framework available, and we have reporting and monitoring. So we actually provide this in our DIY toolkit. So when you take a product from us, you are actually trained on how to utilize these DIY toolkits, and then you can roll on your own, and you can just come back to us if you need any help or if you're stuck from any perspective. Third is we provide end-to-end automation driving operational excellence. So, with our flexible product configuration, our robust workflow and rule engine, as well as continuous monitoring, you're actually able to highly make your operations highly efficient and automate a lot of your operational manual processes, thereby coming up to driving operational excellence. We also have embedded AI, and I will go into the details of the AI experts that we provide. But from an SME underwriting perspective, our AI led document intelligence and fraud detection, as well as our AI credit scoring and SMB cash flow underwriting, is something that's a huge differentiator. And finally, we're a trusted implementation partner. We have 100 plus successful implementations across the globe. We have 3x. What we've seen is we've seen 3x growth in origination volumes, and we've seen a 30% reduction in OPEX. So our uh, partners have actually given us these numbers, and this is something that's something that we're very proud about, because we've actually made a difference to our partners operations. And ideally, when you think about eMACH.ai lending and you think about Intellect's platforms, think about it like Lego blocks for lending. They're configurable, they're scalable, and they're adaptive. So you can use the Lego blocks that you are interested in, and then accordingly you can move ahead and adapt, and you can scale. So you don't have to start directly with a very large scale of with a very big domain pack. You can start small. You can take the Lego blocks that you require, and you can start small, and then you can keep scaling and adapting as you grow and as you gain more confidence. So this is what Intellect is doing, and how we are trying to make a difference. Now, when it comes to AI and what Intellect has been doing from an AI perspective, specifically when it comes to lending, so Intellect has been working on AI for the last 10 years. So it's been a decade's journey that we've been going through. So we've been looking into use cases, we've been looking into what's important in the market, and we've therefore developed our use cases from a lending perspective, and we've reimagined lending, and we've actually created experts across the lending life cycle. So starting with the loan origination digital expert. Now, what does this digital expert do? So I can go on and on about this one, because this is something that I'm very passionate about. This digital expert, especially in the case of SMBs, what it does is it's able to read the documents provided by SMBs. We discussed how today SMBs spend 25 to 30 hours actually compiling documents and submitting it to banks. So this expert is able to read through each and every document. It's able to extract the details from these documents. Second, it's able to also extract data from various interfaces available. So we spoke about open banking, we spoke about all those accounting uh, you know all those fintechs that are available in the US, that are providing a lot of data that you can read. All of that information is also extracted, and all of this is collated into one single application form, and there's a triangulation done, and you are able to check, and this expert is able to check whether this data is valid, thereby doing a fraud detection. And what it does is it creates a loan origination form. So it actually eradicates all those weeks or hours of manual processes that RMs or underwriters have to do, wherein they have to actually go through a lot of documents. All of that goes away, and you have a ready loan application form in minutes. And over and above this, the loan origination digital expert is actually able to provide a hyper personalized loan offer as well in real time. So it's actually able to provide based on eligibility checks, based on rules, etc. It's actually able to provide a loan offer in real time. And finally, there's always an assistant available. Think of it as a co-pilot assistant, that whereby an RM or maybe a customer, if they have questions on the loan terms, questions on the conditions, the stipulations, the clauses, the assistant can actually chat with the customer or the RM and explain it to them, so that again, when it comes to helping the customer understand, that manual part goes away. So, what is the key benefit of this digital expert? Number one, and this is the most important stat that I'm giving, it gives a 10x faster onboarding. So, that is a huge figure, and that's something that we've actually seen with a lot of our partners. Number two is an increase in the lead to approval conversion by 25 to 30%. And number three, there's a 20% reduction in fraud risk events. Now, going to the second digital expert, it's the loan underwriting digital expert. Now, what does this digital expert do? So we saw a loan application form being created by the first expert, and all of this is provided. So all of this data is provided to the digital expert, and now this expert has a lot of data to go through. Now, what it does is, using the bank's policies, using the regulations and the compliance related information, using alternate data sets available, it actually creates a credit score, it creates a cash flow, and it does predictive analysis, and it auto generates a CAM. So there's a case risk analysis done, there's a CAM created, auto created, and there's predictive modeling done. All of this is something that this underwriting digital expert does to be able to come to a decision, and the decision is in minutes, not in days. And there's also an underwriter AI assistant available with explainability, so that an underwriter can actually be in the loop, so as to ensure that if the underwriter needs to, the underwriter can chat with the AI assistant, look at the summary provided by the AI agent, and understand the nuances of the application. Now, why is this assistant there? You may ask me this question. So, with the AI Act that EU is implementing, or the Fair Lending Act that the US has, it's very important to have an underwriter or a human in loop to ensure that all of this is being looked at thoroughly by an underwriter, but where it's helping the underwriter and it's reducing the manual effort is that the underwriter doesn't actually have to scour through a lot of documents and a lot of data. It can get that on their fingertips by just chatting with the assistant. So what we've seen with this is, the key benefit is that there's 100% explainable underwriting, and the decision is in minutes, not in days. And this comes into a lot of help, especially in terms of compliance reporting as well. Now, the third expert that we have is the loan customer service digital expert. Now, what is this digital expert? It's a AI customer service agent, which is 24/7, and it's multilingual, and it's able to engage with customers proactively via multiple channels. So what this means is that a customer that comes to this expert is able to understand a lot of details and and is able to get a query resolution done very quickly, and it's available 24/7. And the key benefit of this is that 80% of queries are resolved autonomously. There's a 40% reduction in call center load, thereby there's a reduction in operational cost. And there is, because of this proactive engagement, there's an NPS uplift by 70%. So this actually also leads to a higher product stickiness and a lower churn, because customers are happy. If customers are being serviced well, they are always happy, and they don't want to leave a lender or a bank that is servicing them very well. The fourth expert that we have is the loan operations digital expert. Now, what does this digital expert do? Basically, it does an AI powered GL reconciliation. There's a portfolio scanner with early warning signals, and there's a regulatory compliance assistant. Now, when it comes to GL reconciliation, there are several systems that the operations team has to go through. There's a core banking system, the payment system, as well as the loan management system. All of this can be reconciled by the AI expert, thereby leading to zero leakage. The second is a very interesting one that I find super fascinating, which is constantly scanning the portfolio to understand, and this is where that LLM, the machine learning, comes into play. So it actually uses the portfolio to constantly go through it and understand, and thereby give you signals by understanding those nuances, by going through their default rates, if there are any defaults, and actually giving you signs to tell you that okay, this customer may go delinquent. And this actually goes back to the underwriting digital expert as well. So it actually also subtly enhances the underwriting digital expert. So this actually is a loop or a circle that you can see, or a cycle. And the third part is a regulatory compliance assistant. With these new acts coming in, it's very important to be on top of your compliance, your regulations game, and having an assistant giving you a report on a frequency that you define actually helps any lender uh, be on top of their game. So, what is the key benefit? There's a 30% reduction in operational costs, there's a reduced regulatory penalties, and there's a reduction in operational risk exposure. Now, finally, we come to the loan collections digital expert. Now, what does this digital expert do? So basically, it looks at agent productivity. That's the key when it comes to delinquency management. How can we improve our agent's productivity? So we provided a predictive collection strategy. So who, when, how. Now, what does this mean? So when it comes to a collection strategy, for some customers, you need to be soft. For some customers, you need to be hard. You need to be aggressive. So you're actually able to understand using the expert as to what kind of strategy that the agent should employ, and thereby you actually do an allocation to the relevant agents, because you will have some agents that are very good at doing soft collections, whereas you will have some that are very good at hard and aggressive collections. So you can allocate according to that. So there's actually also a persona based negotiation that you can provide to these agents. And what we've seen is we've seen a 25% higher agent productivity. We've seen 15 to 20% improvement in recovery rates. And we've seen 30% faster delinquency identification by segmenting borrowers by propensity to pay. So this is something that we are doing in Intellect, and this is something that's constantly being looked at, constantly being developed, because there's product management, product development happening. So this is how Intellect is trying to change its game by leveraging AI. So this is all I had for today. Just to give you a recap, SMBs are critical, and we've seen that traditional underwriting is broken, and it requires a tweaking in the process, and AI unlocks growth. So basically, there's a $1.5 trillion market that is available. That's a gap that's available, and it's an opportunity that lenders should look at. So those who act now will actually lead the future of SMB lending, because they'll actually be able to tap this $1.5 trillion market, and thereby expand their customer base. AI underwriting is a way to balance compliance, to balance resilience and innovation while ensuring fairness and trust. This is what I want to leave you with before we go into question and answers. So I'll open up the forum for question and answers now. So let's take a look at any questions that the audience may have. Thank you.
Thank you, Ankita, for sharing such valuable insights on the role of AI in underwriting and covering very well as in how it is reshaping the entire lending life cycle in such a detailed manner. Now I see we have a few questions coming up in the chat box. So the first question is, what is the accuracy of our system?
What is the accuracy of our system? So with any system and with any AI model, so the accuracy starts at 90%. That's where we begin with. And then as you input more and more data, the accuracy continuously keeps increasing and keeps improving. So it's always at 90% and then it grows. So we always give a 1 month period where we are training the model, and this 1 month can increase. It depends on the size of the business, and then it keeps increasing to maybe 95%, 99%, and so on. So that's how it increases. I hope that answers your question.
Thanks, Ankita. The next question that I can see is, in Europe specifically, where regulations like GDPR are strict, how can AI underwriting can be implemented without compliance risks?
So, in any market, compliance is central. So, AI models have to be explainable, they have to be auditable, and they have to be privacy compliant. So, what we at Intellect are doing is that we integrate with we have GDPR requirements available because we have an enterprise governance model that we follow, and this helps in anonymizing sensitive data. There's PII masking available. We ensure consent based processing, and we offer explainable AI output. So, like I mentioned, we have 100% explainable underwriting available. So, you can actually provide this as a report to the compliance and regulations agencies. So, I hope that answers your question.
Thanks, Ankita. The next question that I can see is, firstly, there's a comment, excellent presentation, thank you. And the question is, how do you work against business lender cultural resistance to AI and build trust in technologies such as this?
Thank you for the comment. Can you repeat the first part of the question? I missed that.
Sure. How do you work against business slash lender cultural resistance to AI and build trust in technologies such as this?
Okay. So, I mean, the idea when it comes to business or traditional lenders, especially the business team, I know the operations or business teams are very against changing their existing processes because they are very how should I say, they're very, because they're very busy, they're already operating, and changing and adopting something new requires a lot of additional work that needs to be done, as well as additional brainstorming that you need to do. And when it comes to AI and how it's very helpful and how it's easy to convince businesses, that you go in with the business impact. So you go in with how it's actually going to make a difference. So I quoted a couple of figures: 10x faster onboarding, 30% reduction in operational costs. So when we look at things like this is what will actually actually convince the business to be able to change and adopt new models. And of course, finally, if they are not convinced, if they're not able to change their way of working, there will be other businesses that grow and your market share will reduce. So you actually have to constantly look at your market share and what your priorities are in order to be able to grow. I hope that answers your question.
Thanks, Ankita. So the next question that I can see on the screen is, how do you address concerns around AI bias and fair lending laws specifically in the US?
Okay. So obviously, in the US, compliance with ECOA and fair lending laws is non-negotiable. So what we do is eMACH.ai within Intellect. I'll speak about Intellect. Intellect actually uses bias detection and fairness checks during the model training. So it's very important that during the model training, we are adding, your bias detection and fairness checks. Along with that, in the model, we ensure that the model is actually ethical as well. So this is something that we actually always work on. And even if you're not using Intellect, I always recommend that you have these checks in place, where whether it's fairness, whether it's ethics, you actually build these into the models, so that every decision that is coming out from the AI is actually explainable, and you can see that it's aligned with the fair lending requirements, and therefore it reduces the bias risk also. So you actually have to put these risks, these checks into place to ensure that AI is operating the way it should. Thank you.
Thanks, Ankita. So the next question that I can see is again Europe specific. The question is, Europe's regulators are moving towards the EU AI Act. How future-proof is our solution? Is your solution?
Okay, good question. So, what does the EU AI Act say? This act categorizes credit scoring and underwriting as high risk AI. So, what does that mean for anyone who's working in the EU market? Basically, it means that it's very important that decisions are transparent, that they're auditable, and there's a human in loop, so that there's no chance of any risk, extra risk happening. So, basically, think of it as a four-eye principle, or a second set of eyes looking at your decision that the AI is making. So at Intellect, what we do is, while we have AI coming in, we always have a human in loop. So it's the AI is like a what should I say? AI is like co-pilot. So it's working with the underwriter. It's working with a human to ensure that the processing is done faster, it's fairer, and it's 100% explainable. So you actually have to bring these in. So at Intellect, we've also been doing this. So there's always a human in loop. It's always something that's available to understand and go through, and therefore we are actually able to uh, be be on top of our compliance and regulations game. So we are actually always looking into regulations and compliance, and we're ensuring that we are up to speed on all the regulations and compliance there in the market today.
Thanks, Ankita. I can see another question. Won't AI underwriting threaten traditional underwriter jobs?
Not at all. So the goal isn't replacement, but it's augmentation. So think again, I'm repeating what I said in the previous answer. So think of AI as a digital co-pilot. It automates repetitive tasks. So things, tedious tasks that underwriters have to do, such as data ingestion, anomaly detection, and it frees underwriters to focus on complex judgment calls, relationship management, and regulatory oversight. So all of this information is provided to the underwriter, and the underwriter is also given a recommendation by the AI, and then the underwriter takes a call. And so therefore you're not actually not giving, like, underwriters are at no risk, because underwriters will actually get more empowered. They're not going to be replaced.
Thanks, Ankita. So I don't see any further questions on the chat box. So I think it's a good time to close. So again, thank you so much, Ankita, for sharing such valuable insights. Thank you everybody for attending our webinar. We truly appreciate your time and engagement, and we hope you found the session really valuable. Your participation and questions really helped us to make the event much more engaging. We look forward to having you in the future sessions and engagements to continue our conversations. Should you have any further questions or do you need any further information, you can reach out to us at marketing.gcb@intellectdesign.com. Thank you again for joining us today and have a great day ahead.
Thank you so much, everyone. Thank you so much, Anshul. Have a great day ahead.